morning. My name is Tiffany Johannes, and I am your 2023 Canopy Realtor Association, Canopy MLS, and Canopy Housing Foundation President. Canopy Realtor Association is pleased to announce once again partnering with Charlotte Business Journal to discuss the housing outlook for 2023 and how to address affordable housing challenges and opportunities. We have a robust program planned today, and it will be recorded. If time allows, we will take questions, and at the end, any questions that we are unable to answer live, we will email responses along with a link to the recorded program to all that registered today. These resources will also be available at canopyrealtors.com. Joining me today for this discussion are Anne Marie DeCatsye, Esquire, and she is the CEO of Canopy Realtor Association, the 16th largest realtor association, and Canopy MLS, the 19th largest multiple listing service in the country. Anne Marie's well-rounded industry experience, coupled with her service on Realtor.com, MLS Advisory Board, MLS Grid Board of Managers, representation on Canopy MLS at the MLS Roundtable, and the Broker Public Portal Board of Managers, further contributes to her unique perspective and understanding of the industry. She continues to give back with committee service at the National Association of Realtors, where she currently serves on the Legal Action Committee. Anne Marie has been instrumental in advancing the mission and vision of Canopy Housing Foundation, the charitable arm of our association. She serves on the executive committee for the Real Estate and Building Industry Coalition, the advisory board for UNC Charlotte's Childers Klein Center for Real Estate, and board of direct advisors for the Local Initiatives Support Corporation Board of Advisors, a nonprofit focused on creating stability for communities, families, and residents. We also have joining us today, Tim Sittema, and he is a managing partner of Crosland Southeast and shares responsibility for the strategic growth and capital market needs of the company. He provides oversight of the company's various development lines, including single tenant, shopping center, market rate multifamily, and mixed multi-use, in addition to the company's affordable housing development efforts. Tim is involved in several public-private partnership developments and believes this structure provides an effective mechanism to solve some of the more challenging needs in underinvested communities. Tim is also very involved in philanthropic work and has a passion for using his real estate platform to improve the fabric of the communities within which we live and work, while helping to expand opportunities for the less fortunate. Yongquiang Chu is the director of Childers Klein Center for Real Estate and Childers Klein Distinguished Professor of Real Estate and Urban Economics and Professor of Finance at the UNC Charlotte Belk College of Business. Dr. Chu conducts research in real estate, corporate finance, and banking. His research has appeared in top finance, real estate, and economic journals, including Journal of Finance, Review of Financial Studies, Journal of Financial Economics, Management Science, Journal of Financial and Quantitative Analysis, Review of Economic Dynamics, and Real Estate Economics. Dr. Chu is also the primary author of the State of Housing 2022 report, which was first released in 2019 and serves as a critical piece of research and starting point for discussions regarding housing policy in the Charlotte region. It is also worth noting that the State of Housing report utilizes data from Canopy MLS. Before we get to our panel discussion, I would like to share a few thoughts. As realtors, we have a significant responsibility helping our clients with one of the largest financial decisions in their lifetime. Since the pandemic, we have seen as trusted advisors who help clients navigate a difficult market. With not enough inventory and too many price increases, too much buyer competition until last year, too much demand. Even though sales slowed over much of 2022, a number of us have had transactions starting this year with multiple offer scenarios, which could mean another difficult market this spring. There's no doubt that our region has been a hotspot for growth, but what does that continued growth mean for the future of affordability across the region? This is what we're here to discuss today: the challenges, the opportunities, and possible solutions to remain a competitive and affordable market. At last year's Housing Outlook and Affordability discussion, Dr. Chu stated, "In real estate, people often say that the most important thing is location, location, location. For housing to be affordable, the most important thing is supply, supply, supply. The only tool we have to battle price is to increase supply. And unfortunately, we are not seeing that happen fast enough. So to start us off, I'm going to ask Dr. Chu to give an update and ask him to give us a quote describing the current state of housing. Dr. Chu, welcome.
Thank you, Tiffany. For that quote, I actually do not have any update. The quote remains valid. So the most important thing for affordable housing is still supply, supply, and supply. So with that, I'm going to start with State of Housing 2022 report released by the Georgia's Klein Center for Real Estate, which also administers the Master of Science in Real Estate and a real estate undergraduate concentration. So I'm going to start with my presentation with kind of a more macro view of the supply and demand of housing. So from the demand side, I'm going to look at the number of households in this region. So here, what I'm showing you is annual increase in the number of households in the Charlotte MSA starting from 2014. So this blue bar, let's say the 2014 blue bar represents how many more households added in this area from 2013 to 2014. One thing you can see from here is that for many years, the number of households increase in the MSA has outpaced the number of housing units added to the market. That means demand has always outpaced supply. And the situation actually started after the 2008-2009 financial crisis. And as you can also see from this figure, the situation got eased a little bit in 2018, 2019, where the MSA added more housing units than the number of households. However, this process was disrupted by the pandemic. As you can see from 2019 to 2021, there's just more households added in the MSA than the number of housing units. And these 2 years alone would introduce about a 10,000 units deficit in terms of housing supply. And if we combine all the undersupply since the 2008-2009 financial crisis, this region is probably in shortage of about at least 30 to 40,000 housing units, which is a big problem to solve. And if we do not solve this, then housing affordability will be a significant concern over time. So here, what I'm showing you is the house prices. So I'm showing you both the Charlotte region and the Mecklenburg County median house price and average house price, starting from January 2020, ends at December 2022. So as you can see, house price has increased pretty dramatically over this 2-year period. And this is, I think everybody understands this. Everybody saw this firsthand, what happened in the housing market during the pandemic. So several numbers that you can take away from this is let's say from January 2020 to September 2022, this we consider like the kind of the pandemic period, the median house price in the Charlotte region increased by 54%. Okay, so if you look at the annual numbers from September 2021 to September 2022, house price increased 14.2%, and then the previous year increased 16.3%. So you may also wonder what happens that in the last half of 2022, where the housing market started to slow down a little bit. Yes, it happened, and median house price decreased by about 6.6%. So given like the dramatic increases in interest rates, and I do not think this is going to lead to a very dramatic decrease in house price. In fact, the decrease of 6.6% from June to December, I would consider that a seasonal adjustment, because usually we have more activity in the housing market in late spring, early summer, but lower housing market activity towards the end of the year. So I do not think that's going to be a big decrease in the housing market. So the other way to look at how limited the supply has been is to look at the median days on the market of houses. That is the number of days between you put the house on the market until the house is under contract. So before pandemic, in January 2020, it was 22 days, the median days on the market, which was already very low. Okay, so a healthy market, you probably would need to look. A healthy market would probably have 3 to 4 months of median days on the market. So the supply was already very tight at the start of the pandemic, and then it became extremely tight in the middle of the pandemic, where the median days on the market became 3, right? So you only have 3 days. It only takes 3 days for the seller to sell the house. It's probably good news for the sellers, but it's definitely the bad news for buyers, right? So you need to really stare at the listings every minute and then go and place the offer any minute you saw it. Okay, so it has really been a seller's market. And of course, as you can see, the median days on the market also increased dramatically toward the end of last year. However, even until the end of last year, we just got back to the January 2022 number, and which I still consider it's a very tight supply and very much still a seller's market. And the other way to look at it is look at the percent of houses that were sold above listing prices, right? So you heard many stories that till this day, there's still multiple offers on one listing, okay? So this is still happening. And again, at the start of the pandemic, this number was a little over 20%, a little less than 20%. So only about 18% of houses were sold above listing prices in January 2020. But at the height of the pandemic, more than 60% of houses were sold above listing prices. Okay, so you can see the supply has been, again, very, very tight over the period. So now let's talk more kind of specifically about housing affordability. So here, what I'm showing you is the income you will need to have at a household level, household income you'll need to have for you to be able to afford a 10th percentile priced house. That means the lowest 10th percent price, and then 25th percentile price and the median price. For housing affordability, we are more focused on the lower end of the housing market. So if you want to comfortably afford a 10th percentile priced house in 2018, the household needs to make $45,000, okay, which is not bad. If you want to afford a 25th percentile price, a household needs to make $57,000. So, and median price, you need to make $76,000. Fast forward 5 years, if you look at 2022, a household need to make $83,000 to be able to afford a 10th percentile priced house, and need to make $136,000 to afford a median priced house. So you can see that there is a dramatic increase in the income you will need to afford the same level houses. Okay, so of course, 2 factors contribute to this. The first one is the dramatic increase in the house price. So the house price since 2018 increased by more than 60%. That contributed to the income that's required. The second thing is, of course, the dramatic increase in interest rate. Back in 2018, you can get a mortgage at 3-something%, and 2022, you're looking at 6.5 or even 7%. So both of these contributed to the dramatic increase in the income that's required to the same levels of housing you can buy. All these numbers suggest that house has become very, very unaffordable in the Charlotte region. Now let me give you 2 more dramatic numbers. So again, still first look at the very lower end of the housing market, the 10th percentile price. If you look at the household income in 2022 and compare it with the 10th percentile price in the housing market, we find that 50% of households in the Charlotte region cannot afford the 10th percentile priced house. Okay, so when we say afford, meaning you're not going to be spending more than 1/3 of your income on housing related expenses. And then if you look at the median priced house, then more than 80% of the households in the Charlotte region cannot afford a house priced at the median. Okay, so if this should raise very significant housing affordability concerns in this region, right? So because if 80% cannot afford a median price house, that means the teachers, the firefighters, even the policemen, they probably won't be able to afford a decent house in this region. Okay, so that should be a big concern. And you may also ask, okay, so you say house price has increased dramatically and houses have become very unaffordable. How about rent? Same thing happens in the rental market. So here, what I'm showing you is the apartment rent per unit and per square foot. This is more like long-term view starting 2000. And as if you focus on the last 2 years, you can see dramatic increases in the rent in the Charlotte region. So from 2020 to 2022, rents also increased almost like 40%. And this has been kind of very dramatic. So because this is kind of unprecedented, both the house price and rent price, probably more so on the rent side, because before 2010, there's very little increase in rents. But after that, we see steady increase in rents and a very dramatic increase in rents during the pandemic. So the rental market is also becoming kind of unaffordable. And you can also, so the previous figure shows you the apartment rents. If you look at the single family rental, still the same kind of situation here. It just becomes very expensive to rent either an apartment or a single family rental in the Charlotte region. The next thing I want to show you is I want to put the Charlotte into a comparison group of regional cities and national cities. And we are first going to be looking at the prices, the median price level. So here, this one shows you the median price level of Charlotte and compare it with 7 regional cities: Asheville, Charleston, Columbia, Greensboro, Raleigh, Richmond, and Spartanburg. So as you can see that Charlotte, of course, does not have the highest price level, but we are among the highest. And the other thing is we have the highest growth rate, 10.69%. So this is based on the census data. So the number is going to be slightly different than what I presented before. But again, comparatively, if you look at this growth number, we are the highest. So we are higher than Asheville. We are higher than Raleigh in terms of house price growth rate. So if we allow this trend to move forward, then we will see even higher price. And this one compares Charlotte with a set of national cities. And of course, if we compare the price levels with all those national cities, of course, we are not the highest. So Charlotte is here. We have Denver, we have Sacramento that had way higher prices. However, Charlotte still have one of the highest kind of house price growth rate, okay, even at the national level. So this should raise further concerns of housing affordability for us. The other thing that we look at when we say housing affordability in the area is to look at what's known as the median multiple, which is defined as the median house price divided by the median household income in this area. And also, usually we consider if this ratio, the median multiple, is below 3, we consider the housing is very affordable. And if it's between 3 and 4, it becomes moderately unaffordable. But if it's above 4, then it becomes unaffordable, very unaffordable. In 2021, for the first time in history, Charlotte has crossed this threshold of 4. meaning housing becomes really unaffordable in Charlotte. Okay, so here I compare Charlotte with with the regional cities, and then here I compare Charlotte with the national cities. Again, even for the median multiple, we are seeing also very dramatic increases over the last several years, and Charlotte still has one of the highest growth rate in this median multiple, meaning the Charlotte housing market is quickly becoming unaffordable in recent years. These are the facts. So the kind of things I want to say is, again, go back to what I said about what's the most important thing for housing affordability: supply, supply, supply. So how are we going to be able to alleviate this problem, right? So the fact is, people still are moving to this area. Business are moving to this area. So the demand will remain very strong in the Charlotte area. Economics 101 tells us when demand increases, if we do not increase supply, then the price will go up. So the only way to slow down the price increase is to build more houses. Notice that I'm not saying house price decrease. I'm saying house slow down the increase. That's probably the best we can do, right? So there are, of course, many significant hurdles that we need to overcome to increase supply, right? So there's always going to be regulation concerns, and there's cost of building concerns, and there's also the NIMBY concerns, not in my backyard. At the end of the day, if we want to see Charlotte growing, then we have to, again, make some compromise. We are not going to be able to increase housing supply if everybody insists we need to have low density, need to have more green space, we need to have more trees. There is going to be a compromise there, housing affordability versus the kind of things we all enjoy, but we have to make some compromise there, right? So thank you very much. That's my presentation.
Thank you very much, Dr. Chu. That was very interesting, and I'm sure that we have lots of incredible questions coming in as a result. To kick it off, I would ask that our panelists, Anne Marie and if Tim would join me here and tell me a little bit about what you thought most stood out, Anne Marie, if you would, regarding the presentation.
I will. Thank you, Tiffany. Thank you, Dr. Chu, for your report, as always. And I think really when I look and I hear you every time and I look at the stats that you report, I think the most startling to me every time I hear it is the increase in the median price between January of 20 and September of 22. When you hear that increased 54%, it's a little bit mind-boggling. I also think that the stat that 80% of households in the Charlotte region can't afford the median price is also kind of mind-boggling. Fortunately, the median price is starting to go down, but it is very startling and very concerning. So I think those would be my two biggest takeaways from what Dr. Chu has reported.
Thank you, Anne Marie. I look forward to hearing from you too, Tim.
Yes, thank you, Dr. Chu. I always find your remarks fascinating since you've been doing this State of the Housing report from the Childers Klein Center for Real Estate at UNCC. I think it's been very important work. And I would say, hearing your remarks today, they're powerful and more than a little foreboding. I agree with Anne Marie. I think the 80% number is pretty staggering. The house price increase is pretty staggering. One of the facts that I'm kind of focusing on, and this may not be precisely factually accurate, but that statistic that you quoted about 50% of the residents in Charlotte can only afford 10% of the houses, basically the 10th percentile. So really what that's telling me is you've got, or 50% of the people, can go buy 90% of the houses, but the other 50% are all competing for 10% of the houses. And they're also competing in that space against the corporate algorithms that are typically buying the lower priced homes. And so that makes housing affordability for those on the lower side of the income spectrum so much more challenging. One just specific example, I was on a call yesterday. I do a lot of work in affordable housing, and we're doing a pilot program for us, a for sale affordable program. And there are some funds available for down payment assistance for first-time home buyers. Home Charlotte has a program that typically is in the $25,000 range. They've actually boosted that for a short period of time to give $80,000 for first-time home buyers. And they're having trouble getting the money out the door because those first-time home buyers aren't able to win these pricing wars against corporate purchasers and others that are they're not dependent on down payment assistance. So it is pretty scary, the story that your data supports.
Thank you, Tim. I also have another question, and you've alluded to it somewhat, but what do you think some of the most significant barriers are to affordable market rate housing and to giving it to the broadest group of people in our marketplace today?
As Dr. Chu said, it is a supply issue. So that might be easy to say, but it's a whole lot more challenging, to address. When you're dealing with trying to increase supply, you're dealing with, head-on tackling additional regulatory burdens. And Dr. Chu mentioned NIMBYism. You also are dealing with the limitations on our transportation networks. You're also dealing with the mindset there, and it may be unspoken, but there are plenty of people that are happy and healthy in Charlotte saying, okay, I'm here. Why are all these other people coming here? I don't really want it anymore. I guess you could call that NIMBYism. But, there's a nuance to it where they're saying, let's just roll the sidewalks up and stop growth, stop urban sprawl, and let people maybe move elsewhere. And I think, that's an unspoken mindset, but it's a powerful one. Even some of the elected officials that I deal with regularly, I think subscribe to that, where they're saying, hey, we don't, why can't we just stop growing? We'll just stop economic development and maintain the status quo. And I think those mindsets are, force a challenge on trying to increase supply.
I'm just going to add to that, Tiffany. I do think that one frustration is even the politicians who want economic development often forget that if you have jobs, you're going to have houses and places for the employees to live. And so you can't have one without the other. And the other is that there's no one size solution to this problem. It's got to be approached from multiple focus, which the Real Estate and Building Industry Coalition and the Canopy Realtor Association are pursuing several options at trying to resolve this issue of the lack of affordable housing.
That's great. What are some of the initiatives that the Canopy Housing Foundation are supporting relative to adequate and sustainable supply of housing for all in our area? Anne Marie?
Well, the Housing Foundation really focuses on the foundation working with entities in the community that are already addressing affordable housing or homelessness. Rather than reinvent the wheel, we're helping support those organizations. So when the Housing Foundation, for example, has our Realtors Care Day, and Realtors Care Day is a way of sustaining homeownership. We deal with people who own their home outright, but they can't afford a critical home repair. And so the Housing Opportunity Foundation's Realtors Care Day has really contributed to keeping people in their homes. And since 2009, contributed probably close to $1.2 million into the community in keeping those folks in their home. The other thing the Housing Opportunity Foundation does is our community grants, which is also direct grants to programs and entities that are, as we said, nonprofits engaged in already dealing with issues of homelessness and housing needs. So that program has been around also since 2009 and has contributed almost $500,000 into the community. So we don't want to reinvent the wheel on the Canopy Housing Foundation side. The Real Estate and Building Industry Coalition serves as our government affairs arm, and that is RIBIC. And RIBIC has been around since the mid-'70s, and we have a very unique situation here where the realtors and the home builders at the local, regional, and state level work very closely together. And in addition, RIBIC represents the commercial developers and realtors as well. And RIBIC has developed a 6-point approach to resolving the affordable housing crisis. And like I said, no one single one of these is going to work. But expanding the homestead exemption, right now it is equal across the board, across the entire state. And it doesn't really make sense that the thresholds are based the same for a large urban area as a rural area. So that's got to change, but that's going to take state legislation. However, we are finding that there's a lot of support for changing that, at least among the large urban areas, the larger county commissioners. So we're hopeful that there can be some changes made there. Another really possible thing is retrofitting existing commercial buildings. There are vacant commercial buildings, but there's got to be more flexibility in the code and the local regulations to allow that sort of reuse, adaptive reuse of those commercial buildings. Then the state tax credit, we really need a model on the federal low income housing tax credit, allow for really increase the amount of the number of housing units that can be built. And that's really critical. I mean, I think everything is going up except for supply. We also need to, on the local level, amend the housing authority law. And really, right now, it's only a 20% set aside for 60% of AMI. And we really need to move that so we can create more for the 80%. I mean, as Dr. Chu pointed out, there's a large group of 80% of area median income who can't even afford an average a home. So that needs to change and give more flexibility to the developers. And then through the UDO, we've got this opportunity now to expand the use of accessory dwelling units, but that's something that's really kind of not going to be retro. It's going to be going forward. And then I think, Tim hit it too, the local regulatory burden and the definition of affordable housing, because the definition doesn't really match even what the House Charlotte definition is, which is that it be up to 110% of area median income, that be affordable housing. The other thing I do want to mention is legislation that was introduced recently that was really proposed by the North Carolina Realtors and the North Carolina Home Builders Association, and that's Senate Bill 317. I would call this sort of the nuclear bomb of affordable housing. It will address the need to build new housing. It will allow developers, it's essentially a new zoning code. And it would allow a developer by right to say, I'm going to build under this new code. They have to have at least 10 acres, but they can set aside 20% for what we would say workforce housing, as Dr. Chu mentioned, teachers, firefighters, police. And of that 20%, 50% of that could be up to 80% of area median income, and the other 50% up to 100%. That legislation could impact the building of affordable housing in ways no other approach could. So I'm looking forward to seeing how that makes its way through the General Assembly this year, and hopefully we'll have that new zoning code by the end of this session.
You're right, Anne Marie. That would be a definite bomb. That would be a good bomb on our economy and on our housing market. Switching over back to Tim, tell us a little bit about what Crosland Southeast is working on to provide housing for the market demands and how you're meeting them.
Thank you, Tiffany. Our company does a lot of different types of development. We do mixed use development. We do grocery anchored retail development. We do single tenant development. But on the residential side, we do market rate multifamily. We do lot development in some of our bigger mixed use developments like Waverly, and we're working on the Eastland Mall redevelopment now. We also do a lot of affordable housing, and I spend a lot of my time in that space. And within the affordable housing realm, we do different types of tax credit apartment development. And there's a lot of acronyms in this space, but a 4% low income housing tax credit deal and 9% LIHTC deals. We do both of those. I mentioned earlier that we're with our dear friends at True Homes. We've got a venture that, along with Freedom Communities, a local nonprofit, we are doing our first kind of pilot program on a for sale affordable townhome style development. We've also done some acquisition rehab and rent to own on the lower end of the home price areas. Again, really trying to target those folks that are really challenged to get housing. A lot of the stories we hear are people, often a single parent with 2 or 3 kids moving out of a storage shed into their first apartment, or moving from an apartment into their very first home. They're heartwarming stories, but unfortunately, those stories are few and far between, given the challenges, especially on the low income side of the housing spectrum.
I think we're really blessed in Charlotte to have organizations like Crosland Southeast and True Homes and Dream Key Partners and Laurel Street. Those are all developers, builders trying to solve the affordable housing crisis, but they're subject to the same regulations that market rate builders are too. So I think that's something to point out, that there's no like carve out or exception if you're trying to build affordable housing. And so there's an even greater need to address the regulatory burdens imposed by local and state government.
Yeah, and I would say, thank you, Anne Marie. I would also say that there are folks at the city right now that care as deeply about these issues, of course, as we do, and they're looking at, can they relax some of these regulatory burdens? I was interacting just this week with several folks at the city about this very topic. They've asked us to help provide some, documentation with regard to the costs associated with some of these regulatory burdens. But as Dr. Chu had mentioned, often it's a balancing act. Charlotte just passed the Unified Development Ordinance, which becomes effective this summer. And there's a lot of good things in that ordinance. And as Dr. Chu pointed out, who doesn't like tree save, and who doesn't like bike paths, and who doesn't like, more open space and things like that. But the net result of every one of those items is less land yield, which drives housing costs up. When you've got a 12-foot wide bike path instead of a 4 or 5 foot sidewalk, something's going to give. And so balance in the regulation is key. I'll give you one extreme example of imbalance. The first 2 drafts of the Unified Development Ordinance preserved heritage trees, and I forget the exact dimension. I think it was like, if it was more than a 32-inch circumference tree or something like that, a certain size tree was defined as a heritage tree. If you had a heritage tree on your site, you could not remove it. You couldn't pay in lieu. You couldn't do anything. Well, you could maybe work around a little bit with housing, but you certainly couldn't, if you're trying to do 1 million square foot Amazon building or a large scale development, which includes a lot of housing options, you can't work around every large tree. And so there has to be a balance. And fortunately, I think we found that balance on that particular issue. And it took a lot of work from the industry because there were a lot of people very passionate about both sides of that issue. Electric vehicle parking is another one. It's good to add more electric vehicle parking. It also adds a lot of cost. And so there's balance that needs to happen with these additional regulations.
Anne Marie, what can realtors do to help promote the initiatives and get more involved in the conversation today that we're having?
Participating in this today is a start. Being knowledgeable allows you to be an advocate. And we're not just advocates for the industry. Realtors are advocates for home ownership and housing in general. And I think that there's a lot of opportunities at Canopy specifically for our members if they take advantage of them. We have the Canopy Real Estate Institute, which is responsible for our workforce housing certificate program. And I was at a conference, an NAR conference on Monday, and they were talking about how hard it is to necessarily address that low end of the population, the first-time low-income home buyers, when you have to almost work twice as hard to make half as much But our workforce housing certificate program really educates our members. And these are members who want to work with that population. And honestly, it's one of the most things I'm most proud of, because we've had hundreds of members volunteer to participate in this workforce housing certificate program and educate themselves about what's out there as far as financing and education for first-time low-income home buyers. So I would encourage taking advantage of that. And then we also have opportunities through the foundation, like I said earlier, working on Realtors Care Day. That is an opportunity to give back to the community and show that realtors care more than just making a sale. And we care about keeping people in their home. And that's what Realtors Care Day really demonstrates. So those are some of the ideas of how you can get involved. We also have a focus in April on fair housing. That's a National Association of Realtors designates April as Fair Housing Month. And fair housing is very much tied into housing opportunities and affordable housing. And so if members could really look at the opportunities that we provide to educate our members on fair housing, including NAR's bias override training, I would encourage that. But the simplest way also is just to sign up for a committee. We'll be marketing what the committees are in August, and the signups are in September and October, and there's ample ways for members to get involved.
That is great. Thank you so much. Tim, I want to also ask you, what would you say that's on the agenda right now at our local level will be some of the most important pieces that, if passed or if moved forward, would make a difference in our community for affordable housing?
You know, we're all still trying to figure out exactly what we just passed with the Unified Development Ordinance. And so there's not a lot of new beyond that. I think, the City Council adopted the Unified Development Ordinance. I believe it becomes effective. I think it's June the 1st. And frankly, we're just going to have to see what the precise impacts of that gargantuan piece of legislation does. It does permit and relax some restrictions, like you can build duplexes and triplexes in single family areas. It does allow for more generous use of accessory dwelling units. Those two things potentially could help the supply side, but it also, counter to that, in my view, reduces land yield, with some of these more expansive open space, tree save, swim buffer type regulations, and time will tell just, what the exact impact of that is. One other thing I wanted to just tag on to Anne Marie's comments. I think all of those were wonderful suggestions. I just use every opportunity I can to make the maybe obvious statement that affordable housing is not a poor people problem. It's a quality of our community problem. When Dr. Chu points out that 50% of our residents can't afford 90% of our houses, you can see, pretty easily that, this is a very far-reaching challenge. And as we have a growing workforce, companies are going to expect people to be able to perform for them. And when they have to drive an hour, to get into town because they can't afford anything closer in, that diminishes the efficacy of our workforce. And so it is a quality of our community issue. And I think, as Anne Marie pointed out, getting more knowledgeable about those facts helps you become an advocate for some of these challenges and regulations that we might be able to advance.
Thank you, Tim. And Dr. Chu, I wanted to bring you back into the conversation and ask you, based on what you've heard about the different strategies that Anne Marie mentioned, as well as Tim, what are your thoughts on those strategies and how they can impact our community?
There is, of course, no single solution would kind of resolve this issue. To increase supply, there's got to be many different kinds of to think about strategically. So one of the things I recently saw is a hospital that looks at what they call the workforce housing. I think that's probably a good idea. That's a kind of a good idea to ease a lot of the restrictions that developers and builders face, and then to ease those restrictions, I think in the long run can significantly increase housing supply. So I think that's probably a good idea. I think the other thing is to educate people to understand this housing affordability issue, to understand that NIMBYism in the long run could hurt themselves. I think that's also important, because you cannot just look at like, oh, there is going to be some new development outside my neighborhood that will affect my daily activities. But in the long run, if you always restrict those kind of housing supply, what's going to happen is your schools will not have good teachers, because teachers won't be able to live in that area. Probably not going to have very good firefighters, very good policemen, because they cannot afford to live in those areas. So we need to create this kind of mentality that NIMBYism in the long run can hurt yourself, right? So I think if everybody is on the same page that allowing housing development, in the short run, we may suffer a little bit, but in the long run, it can benefit the community. It can benefit yourself in the long run.
And I'm going to add to that. So housing is single family and multifamily. And again, Lawrence Yun, who's the economist for the National Association of Realtors, said on Monday, the best way to control rent is to build more. And address the supply issue. And that will keep rents lower, because the rents are going up just like the cost of housing is going up. And there's a lot of multifamily building happening right now. And there is a lot of NIMBYism. And I think we had this conversation in our pre-meeting that it takes educating our spouses, our neighbors, our friends, that this is a good thing. This is what we need. The number of units that you mentioned that we're short just in our region is mind-boggling. And I don't think people even really think or make that next association that we're talking about the teacher, the fireman, the police officer, and we don't want them to have to commute an hour away necessarily. So I think it's really important as an industry and as a community that we embrace all the development that's happening, because we need it.
There are a number of questions coming up in our Q&A. And as you can imagine, they range from, do builders get incentive if they provide percentage of their housing for affordable housing? That's one of our questions. The other is from an apartment standpoint and the rise, is there a way to divert that over to single family homeownership? And I know some of the strategies that are out there today could provide that. Would any of our panelists like to comment on those two topics that seem to have brought a number of questions?
I'll start there. I hear it a good bit. In fact, the elected officials now are talking a lot more about home ownership, because obviously home ownership, does more for wealth creation than rentals do. And I know Canopy has all the stats on what percentage of residents in Charlotte or in the country rent versus buy, but it isn't an either or proposition. You have to have rentals and you have to have for sale homes. You have to have both. At least a third, probably a little more than a third of the residents in Charlotte prefer to rent. And so you've got to have options there. And the other thing I'd say is we've used a lot of acronyms already this morning, AMI, area median income, and, affordable housing serves by definition kind of 30% area median income families up to maybe 80% AMI families. There is no ability for families on the low end of that scale to afford home ownership. It is unfortunately out of reach for them, and so you have to have housing options for those lower income folks. So it has to be both and, not an either or.
And before the UDO, at least we had what I would call voluntary inclusionary zoning, where there were some incentives for higher density for builders who did set aside a certain percentage. And I'm not sure that those incentives were enough, and that it didn't really result in what we had hoped for would be more set-asides, but mandating it is going to even be worse. So I think that, I don't know if, Tim, you ever experienced it prior to the UDO of dealing with inclusionary zoning on a voluntary level in Mecklenburg County, whether those incentives really were working or not.
Yeah, and you actually touched on it with one of the recommendations, the 20%, 60%, specific legislation. Inclusionary zoning on the surface seems like a good idea in the sense that it distributes lower income families into different parts of our community, gives them access to better schools and more amenities and so on. And diversifies, our demographics. I think that's great. The bad news about inclusionary zoning, and which is why it probably, won't be passed anytime soon in our state, is it forces specific landowners to bear the cost of society's problem, which is the affordable housing crisis, and that's not equitable. And so there have to be better ways. And one way to do that is to incentivize developers to do it on their own. And our tax codes are limited in the state of North Carolina with how far cities can make those incentives. For example, you can't just waive property taxes or portions of property tax for an apartment developer if he wants to put 10% of his units strictly affordable. There's no way that our municipalities can allow that to happen. And so there needs to be some legislative changes at the state level. And we're already beginning work in those areas to try to pull the private sector more forcefully. Really, it's a public-private partnership. The public sector giving some more tax breaks and other types of financial incentives to level the playing field, to incentivize those so inclined on the private sector to provide more supply on the affordable housing front.
And I think if it's not a public-private sector effort combined, all you're doing is putting it on the private sector, and you're cost shifting from the affordable to the market rate and making the market rate even more unaffordable, which it already is. So we have to have that infusion of the public sector's assistance in these incentives.
No, there's absolutely no question. You cannot develop affordable housing with the private sector alone. You just can't build any. It's got to be a public-private partnership. The tax credit program, low income housing tax credit, is a terrible program, but it's the best program we have. And so it's the one that's being used to develop a lot of affordable housing. But as costs have escalated so dramatically, and as interest rates have escalated so dramatically, it's rendered that program even less effective now. And the financial gaps that have to be solved are staggering.
That is very true. One of the Q&A from our audience was directed more to Dr. Chu, I believe, and it is a good segue from where we are now. Is what does it mean economically when demand shrinks because of affordability?
I would not call those kind of demand shrinks. This is really supply. When supply is not there, people just cannot move to this area. So what will happen is the kind of growth we have been seeing, the kind of things that are happening in the city we are enjoying will at some point will probably kind of either slow down or stop, because people do not want to move to this city, because people do not want to move their business to the city, because they cannot, the employees of those businesses cannot find a decent home. Then that's the kind of growth we all like and enjoy. Hopefully everybody likes and enjoy, will at some point stop. So that's the biggest concern.
That is great. And Dr. Chu, another question from our audience was relative to the Mecklenburg County and Charlotte property revaluations and how that will impact affordability and home ownership in our area.
So they have not released the revaluation yet, right? But everybody is kind of expect that we will see a big increase in the revaluation, which I don't see a problem because, yeah, the house price has increased a lot. You have to increase the valuation. And also, one of the very fundamental problem that facing housing supply is in this Charlotte area is infrastructure. So we have a huge infrastructure problem, a lot of like the sewage capacities kind of stuff. And kind of we need money to solve that problem, right? So who's going to be able to solve that problem? Where does that money come from? Some of that money will come from like property taxes. So we are all enjoy what's happening in the market, and then we have to pay a fair share. So I think the property tax will increase, and I think I don't see a problem with that.
Thank you.
So where there is a problem with that is in the older neighborhoods, the folks that we're working with on Realtors Care Day, for example, they are barely keeping their house, but they own it. And when the taxes increase and they can't afford it, that really puts the stress on them being able to stay in their home and could result in gentrification of that neighborhood. Gentrification, we could talk about for another hour. It's good and it's bad. But if somebody wants to stay in their home, this is why it's so critically important that the Homestead Act exemption get looked at and increased for urban areas. But it's also something that the city council or the county commission can look at as well, as far as allowing more low income folks to not necessarily have to pay the entire tax rate. And that's got to happen, because there will be folks that are forced out because they can't afford the new tax rate.
Thank you, Anne Marie, for that insight. We also have had a number of questions regarding the recent banking issues that we've seen. Dr. Chu, would you like to comment on your expectations there?
So, of course, given kind of the recent events, people would be worried, but I'm actually not that concerned about the bank failures, because first of all, these bank failures are very different than the bank failures in 2007, 2008, 2009. So because in those cases, it's mostly because of credit risk. That means mortgages default, banks cannot get their money back. In this case, this is mostly an interest rate risk problem. So the good thing about interest rate risk problem is it drags down several banks, but these banks had huge problems to start with, okay? Especially for SVB, they had a huge amount of uninsured deposits, okay? Much more than a typical bank you would have. And also they had a huge amount invested in fixed rate treasury bonds and mortgage-backed securities, and they did not hedge, right? So, which was a bad practice. But the good news is these things do not have a contagion effect usually, okay? So at the end of the day, the problem will be limited to not a huge number of banks. So that's one thing. I do not see that this will cause a systematic problem. So, but there will be cases where like a small bank, they are also did not do the did not manage interest rate very well. Then these small banks will probably tighten their lending standards especially for mortgages. That's regarded to housing. So that will have some kind of impact, but I do not see that this will be a huge impact. And the other thing that will happen is probably because of all these concerns, the Federal Reserve will at least slow down the rate increases. Okay, so we actually have already seen that mortgage interest rate decreasing in recent days because of that. But how much that Federal Reserve is willing to slow down the rate increase or even stop the rate increase, that will have an impact on housing affordability as well. So I would suggest that people do not get too worried about this, because although I say it should not be a problem, but if all people are all too worried about this problem, that it really becomes a problem. So the worst thing can happen is, let's say everybody nowadays, all of us, like going to Bank of America and Wells Fargo trying to get our deposits back, then everything breaks down. This is going to be a disaster. But there's no worry at these, like most of these banks.
Thank you, Dr. Chu. I'm sure that was refreshing to hear for a number of our people listening today. I have another question I'd like to throw out to anyone on the panel who'd like to answer it, and it comes from another member of our audience. Are there any case studies that we can look at from other cities that have been in a similar situation to Charlotte, who've either done it right or done it wrong, that we can learn from or look to find solutions?
I'll jump in there to start with. It's kind of interesting. The Charlotte Observer wrote an article, front page, Sunday edition, like 3 pages long, a month or two ago, talking about best practices other cities are using that why can't we use in Charlotte? And one of the examples they gave was a developer in Nashville that had this innovative partnership with a nonprofit and the city, and they've got a planned project to do 8 units of affordable housing, and it's innovative, and we should be doing that. Why can't we do that here? Well, our company alone has already done almost 1,000 units that way. So, and we're not alone in that space. Our Crosland Southeast platform covers, the southeastern U.S. from Florida up through Virginia, the Carolinas, and west through Tennessee and Georgia and so on. I have kind of a perspective on a lot of those different cities, in that footprint. And I would say for the most part, Charlotte is leading most of these other cities. Certainly they are with the Housing Trust Fund and the CHOIF, Charlotte Housing Opportunity Impact Fund. Those are kind of tip of the spear type solutions. Now, it is true that Georgia has a state tax credit, and once they passed it, it dramatically scaled the production of new affordable housing. South Carolina's adopted that, Virginia, and they put the program on pause because it was too effective the first year. They had too much demand, and so they had to slow that down a little bit. Virginia's looking at that. So at the state level, I think some of those other states are beginning to focus on some of these bigger solutions. But at the local level, I think Charlotte specifically is ahead of most of the cities that we compete with.
Yeah, and I agree. And I think we talked about this before when we met, that Charlotte tends to be its own worst critic when actually we are actually doing more than other municipalities are doing. But we always want to improve. But the Housing Trust Fund at the local level is something that the Realtor Association has always supported funding and supported the bond referendum for that. And I think that's a critical point, Tim, that we've got that base of funding, which again is a public-private endeavor on the CHOIF side, to make sure that there is capital to at least contribute to the development of affordable housing. But then you have to kind of, balance it with the regulations. And like Tim said, really kind of look at the regulations that aren't contributing to health and safety, and how far do those have to go before they impact development costs or building costs.
That the Housing Trust Fund that we've all mentioned multiple times now is voted on by the population in Mecklenburg County every 2 years. And the last few years, it's been a $50 million bond that has been for a 2-year cycle. So essentially $25 million a year. The voters have to approve it for it to be in effect. Thankfully, they have approved it each time it's been up for a vote here in the last several cycles. My view is that 50 million needs to scale more than that, because it's it's needed it's much more essential today to close these financial gaps. But there's hundreds of people on this call today. Educate yourselves about that and cast a vote in favor of the Housing Trust Fund when it's up there, because without that, we go backwards on the affordable housing issue for sure.
Absolutely.
Thank you. One last question I'd like to ask each of the panelists is, if there was one thing that you could share with each of the levels of government that would significantly improve the ability of individuals and families to realize the American dream, what would it be? And Dr. Chu, do you want to go first?
If the government can stay further away from all this kind of things, it will be better.
Thank you. And Anne Marie?
So I'm just going to throw out a stat that I heard that the cost of regulation from all three levels of government could add up upwards of $90,000 to the cost of an average sales price home. And it's almost a split between development and building costs. And that seems a bit outrageous, that there's got to be some look at what's causing that. And for example, on the federal, I'll just throw a federal example out. We have the EPA and the Endangered Species Act. Well, of course, we all care about clean water, and of course we care about endangered species, but sometimes these government agencies exceed their authority that's given to them by Congress. And I think Congress needs to really make sure that they are staying within what is given to them by Congress and not exceed that regulatory authority. Otherwise, it's going to add to the cost. And that is all the way local, state, and federal regulation.
Yeah.
Thank you.
I can't say it better than either of those. I spoke on an Urban Land Institute panel just a couple of weeks ago, and I attended another section that was on affordable housing. And the participants, there was a big room. There were, I don't know, 400 people maybe in that room, and they were talking about it. And I made some remarks about, not unlike what we talked about today, about supply demand and the balance that's needed in regulation. And I made those remarks because it was up in Raleigh, and I knew there were elected officials in the room. And one of them, a mayor of a prominent city in Charlotte, grabbed me and said, trees save lives. We've got to save trees. And she's right, of course. But I wanted to say, so how would you tell a mom who's living in a car with her 3 kids that, we're passing more generous tree save requirements, and that's going to keep you from getting the house you're looking for. But think about it this way: we're saving lives, long term, through trees. And I mean, it to me, that kind of captured the issue. There has to be balance in regulation. There has to be balance in regulation. And those are tough decisions to say, okay, how do you accept maybe a little smaller tree canopy in exchange for specific individual families getting stable housing for the first time in their lives?
That is very true. And I want to thank all of our panelists again, Anne Marie DeCatsye, Tim Sittema, and Dr. Chu. You guys have all shared a lot of valuable information and a lot of great resources. And as I'm hearing what you're saying, our leadership is going to Raleigh to speak to members there of the General Assembly and the Senate, and then to federally in DC the second week in May. And so these are all messages that I think we should have on our mind and be ready to share and have conversations with as realtors. For everyone else and for our listeners, please look for coverage on this panel discussion in early March in the Charlotte Business Journal. And remember, we will email responses along with a link to the recorded program to all registered attendees for the questions in the chats. These resources will be available on canopyrealtors.com. And I hope you all have a wonderful day. Thank you for joining us today. Thank you again to all of our panelists. You did a great job.
Thank you.
Thank you.
Like our podcast? Well, subscribe, give us a review, and tell your friends and ask them, hey, have you gone inside the Canopy Files? Canopy Files is a production of Canopy Realtor Association. We'll see you next time.